I'm a technologist. I'm not a financier. So it's pretty hard to predict sort of where the price of various assets go, other than more applications, more users, more transactions, more total value locked, more possibility, more integration, more seamlessness generally is considered, good for all members of the ecosystem.
Welcome, everybody, into another important discussion on one of the hottest topics in crypto right now, as Ethereum finally gets its Dencun upgrade. If you don't know what all the fuss about Dencun is about, that's what we're going to chat about right now. Joining me on the show, once again, Matt Cutler, the co-founder and CEO at Blocknative, joins us once again. And Matt, it's so good to see you again, man. Thanks for hopping on.
You bet. Great to be back, Zach. Thanks for having me, and happy Dencun Day to all who celebrate.
Happy Dencun Day, man. A lot of people are celebrating because it's a huge upgrade. At each time, we've had you on, it's been another huge celebration of Ethereum upgrades. Last time was, I think, Shanghai. This time around, Dencun. Each time, man, it's a testament to kind of, I guess, what Ethereum's all about, this idea of upgrading a network while it's still in motion, and another successful one today, I think. But want to get your thoughts as someone who's been building in the Ethereum ecosystem for so long and, leading a company like Blocknative, a leader in the space, what this means. So maybe we just start there with kind of what you make of Dencun, how you explain it to people, saying that this is a huge day for Ethereum.
Sure. So Dencun is a hard fork, so a major upgrade to the network. For perspective, Ethereum is securing about $1 trillion in financial assets right now, so it's not a trivial thing to upgrade that. It tends to follow a tick-tock cycle, so a major upgrade followed by a minor upgrade. Dencun is a major upgrade, and the headline feature is what's known as EIP 4844, or data blobs. And effectively what it does is greatly reduce the transaction fees for layer 2s that sit on top of Ethereum. What this does is allow for more scalability, faster transactions, more transactions at a dramatically lower cost. It does so in a fairly clever fashion, and so it's not really a user-facing upgrade. Most users won't notice significant changes as a result of Dencun, except if they're using one of the big layer 2s like Arbitrum or Optimism or ZK Sync or Base or any of the others. Transaction fees will be maybe 60 times cheaper, and maybe more. And as a result of that, there should be a huge explosion of innovation that occurs in those ecosystems. There are a number of other changes that are part of Dencun. I think there are 9 EIPs that make it up. Many of them sort of small under the covers improvements, but it's really blobs and what's called proto-dank sharding, which is really the headline feature. And it's just things get cheaper across the board for layer 2s, and that has huge implications for everybody else.
I like how it's like, there's blobs, there's proto-dank sharding, there's all these features and terms, and it's really 60 times cheaper is the main headline that jumps out when you think about what this now enables. And it's really cool. You guys have a really cool tool, ethernow.xyz, I'm looking at right now, and just kind of like looking at all of the stats that you guys at Blocknative help people look at. Explain to me what exactly that means when you say blobs, when you say bundling these transactions. I feel like a lot of people have been using the metaphor of kind of like a bus rotating on top of a crowded highway. What's really going on under the hood here?
So what's going on under the hood is the Ethereum has a scaling roadmap, i.e. how do we get more transactions through the network and how do we get them at a cheaper price, right? And the stated direction is via L2. So these are basically blockchains that sit on top of the Ethereum blockchain, so blockchains on top of blockchains. And what blobs are is it's a cheap way to write data down to the layer 1. What does this mean? A layer 2 can do 1,000, 10,000, 50,000 transactions, batch them together into a single transaction that gets written down to Ethereum, and all the details around that get recorded as a blob. And the thing about this is the data is big, as you might imagine, and big is expensive when it comes to decentralized systems. And so basically what blobs do is open up a new avenue to record data to the Ethereum blockchain. It's important to know that it's an ephemeral layer, meaning the blob data only sticks around on Ethereum itself for about 18 and a half days, so it's not forever. There are providers who plan to store these blobs forever, Blocknative being one of them. And so what this does is it frees up resources. It sort of opens up new resources on the network, frees up other resources. So as a result, price goes down. So at the end of the day, one of the big challenges with Ethereum is, while it's a very secure network, it's historically been rather expensive to transact on. And this sort of uncovering and of new resources, of new ways to price it, basically makes it massively more efficient and therefore massively more scalable. So we'll be seeing 1 cent transactions, sub 1 cent transactions that settle very quickly as a result of EIP 4844 and blobs. The other thing that's really nice about it, it's the first step on this journey. It's called proto-dank sharding because it's the first step along the way, but it sets the stage for all sorts of future updates that can happen underneath the covers. The blob space can get bigger, it can get faster, it can get more flexible, and there's sort of no other changes that need to happen. So it's a major 0 to 1 moment in terms of this capability, and it sort of clears the way for more to happen in this regard.
Yeah, our head writer, Andre Bagansky, and I were going back and forth for the perfect metaphor here. And, it could be a bus on top of a highway, it could be a designated lane on a highway. A lot of traffic, though, is being reduced by, I think, this in terms of how the layer 2s and Ethereum base layer are interacting here. There's also a chart from Dune, just looking at a share of total transactions that I'm looking at across a lot of these layer 2s and how this might impact things. I'm curious to kind of get your take, Matt, on the way that there are now so many layer 2 solutions. When you throw this into the mix, what do you think the biggest change will be? I mean, obviously this is just the beginning, but what happens post Dencun for these layer 2s? What you expect to see when it comes to maybe, I don't know, I know you don't get into price, but what happens now when we think about the way that these networks interact with Ethereum and how maybe retail consumers should be thinking about this?
So I think the long-term vision is that most end users will be onboarded into L2 applications. So this is where they'll start. They won't use Ethereum L1, they'll use an L2. And I think an interesting example there is Base, which is Coinbase's L2 built on the Optimism stack. It's called the Superchain, and they're just trying to make it as simple as possible for new people to get on board, transact with a stable coin, have a self-custodial wallet, and do useful consumery things. And now they can control the whole experience. So this is one of the challenges that we've always faced with Ethereum is there's a transaction model you have to apply to. You have to conform to. There is a fee structure that you are sort of subject to everything else going on in the network. And these L2s can now sort of cut that off and segment that away so they can make their own assumptions, they can make their own trade-offs, they can have their own capabilities. And what goes on layer 2, over here versus what's going on in layer 2 over there doesn't really affect each other all that much in any sort of material fashion. So one, it enables parallel innovation. Two, it enables all sorts of growth in terms of applications that may not have been cost effective before because the transaction fees were too high now become cost effective. So it does significantly open up the design space. I personally have been pretty surprised in a positive way at just how many L2s are out there today. I think there are 45 L2s that are active on Ethereum mainnet, and there are at least another 35 that are under development and coming. And some of those L2s are kind of L2s of L2s, so you have what are called L3s. So I think you're going to see an explosion of possibilities here. Practical examples would be things like app chains, where you might have a game that has in-game assets and currency that's just its own chain. It doesn't need to worry about interfacing with anything else, doesn't need to worry about all sorts of other complexity that you get on the Ethereum L1. You just get a really simple asset with really low fees, really fast transaction times. And then ultimately, if you want to cash out, you have a mechanism to do so, all secured by Ethereum underneath. So that's what's coming. So, many folks are saying L2 summer is upon us, that this is sort of the golden era of L2s. And, based on what we saw at ETH Denver, that's not far off the mark. There's a lot of excitement about what's going on.
Well, I do wonder about this. I mean, you've been in the space for a long time, longer than I have. And when you think about, I guess, the idea of what we saw before in terms of hard forks and like Bitcoin splitting and Bitcoin Cash and all this stuff and all the backgrounds, like, is there ever a fear that there might be too many L2s? When you start to kind of maybe take away from the need for all of that demand and block space on Ethereum layer 1, if you have a bunch of these, I guess, offload for traffic on layer 2s. That was a question that at ETH Denver, no one who is building a layer 2 wanted to answer. Is there ever too many layer 2s?
So it's an interesting question. I would say that you do have a certain degree of fragmentation that occurs as you have multiple L2s, but of course that's just a technology problem. You're going to have inter L2 communication, just like you have cross-chain communication today. So I think these are all practical problems. In general, I think at this early stage of our ecosystem's development, I think we want to have more free range, not less, fewer constraints. And that ultimately the market will decide. There probably will be, a few too many L2s that get developed, but the market will decide which are the ones that are the most viable, which are the ones that are the worth spending time on. And
Yeah.
those will be the ones that rise to the top. I think if you'd asked me a year ago, I would have said there's going to be a handful of L2s that matter. I think today it's pretty clear it's far more than a handful. Is it 15 or 50 or 500? I think the jury is out, but it's certainly greater than three or four. There's a lot of good reasons why that would be the case.
What would be
Um,
the what
I
would be
think
the simple what would kind of be the simple pushback on like, okay, this is bad for Ethereum pricing, right? And the idea of like, okay, all that demand for block space going to Ethereum could potentially maybe hinder the idea of Ethereum's price going up.
Well, so there are many factors that impact the price of. I think you're talking about the price of Ether itself, the
Correct.
underlying
Yeah.
asset, right? And so, I think my view is the price of the asset should generally reflect the utility of the network underneath. So, to the extent that a proliferation of L2 and L3 solutions increase the utility of the network, that should be net constructive for the value of ETH. Now, traders are going to trade, right? I'm a technologist. I'm not a financier, so it's pretty hard to predict sort of where the price of various assets go, other than more applications, more users, more transactions, more total value locked, more possibility, more integration, more seamlessness generally is considered good for all members of the ecosystem. And so I think will be quite constructive. I think
Yeah.
at the end of the day, Ethereum is a technological bet. It's an innovation bet. And for anything you look at, from an innovation perspective, that's not good enough. It's too big, it's too slow, it's too expensive. Just add time, right? With time, things get smaller, things get faster, things get cheaper. And we see that today on Ethereum. And so there are still many limits, many issues, many stuff to address. And my answer is always just add time, right? This is no secret that things are a little hard to use and things can be confusing. And sometimes stuff gets wedged. You're like, yep, just add time and we're going to be fixing it. That's why we at Blocknative are building what we build.
Yeah.
And I think this is a big step in that direction. Things just got a lot cheaper and then arguably faster as well as a result of Dencun.
Yeah, no, it's exciting, and I think that's why everyone on crypto Twitter today was shouting out your guys' tool to see, okay, when's the first blob coming? What's going on here? And there's a lot of excitement around all of this, and again, Matt, you're one of the smarter people that we've had on the show. I arguably could say the smartest when it comes to kind of what this tech does. You say you're a technologist. One of the big questions around the technology of kind of the next big thing that everyone was talking about at ETH Denver, I think you would agree, was kind of liquid restaking. This idea of what happens now. Eigenlayer, a few other people out there building their own restaking projects. What do you make of that? How important is it for, I guess, Ethereum now, and kind of what should people know about what that unlocks?
So restaking is the new hotness. It's the concept that you have Ether that you stake to secure the network. And so Ethereum today has over $100 billion of value staked, which is the foundation of the economic security. Now, hey, I want to build something new. I want to have new economic security. I got to convince a whole bunch of people to hold an asset, to run infrastructure, to do. It's a heavy lift. What if instead I could just restake the Ether that I already have? And I could secure other stuff with it. Now, like I could layer this stuff on top of each other. One, it would be a lot easier to build new networks with great economic security. And two, the asset that I already have staked and locked up, I can now basically earn more yield from, right? So it kind of makes a ton of sense. It introduces a whole bunch of interesting questions and complexity. But what's going to happen is with Ethereum as sort of the base layer, with the sort of core of the economic security, we can
Mm-hmm.
now modularize that and build on top in all sorts of interesting and unique ways and create other value networks. It's great for ETH holders because ETH holders can earn more yield. It's great for new projects because they can bootstrap economic security in ways they could never do before. And it's
Yep.
great for the providers of these services because there's a lot of opportunity to add value and therefore make money at it, right? there's also risk. New yield does not come with new risk, and so I think we're at the beginning stages of exploring all of that. But
Yeah, it
restaking
makes
is yet
me
another thing. Sorry, go.
it makes me a little nervous just based on like kind of what we saw in the Terra run up with kind of circular loops of it wasn't called restaking then, but it was kind of finding yield on loops in stable coins using the Terra ecosystem. And there are flashbacks. I'm not going to call it right now because I haven't dug too deep into it, Matt, but I am saying
Yes.
there are a lot of questions and a lot of people right now looking at restaking and saying, could this go poorly? And I don't know if there are any fears that you've seen as well, because from a technology perspective, it makes a lot of sense. From an economic perspective, there are maybe potential death spiral risks that maybe some people are talking about now.
So there's certainly you're adding risk on top of risk. There's no doubt about that. And I think the good news is everybody is fairly eyes open about that. I don't think anyone's sort of saying, "Oh, it's free yield. Oh, there's no extra risks here," right? I think at the end of the day, it's pretty clear that you're taking additional technological risk, and therefore you get additional yield for that. What will happen, I think, at the outset is people will be moving in a fairly measured, thoughtful, deliberate fashion. And then with all of these things, numbers get big and people race to the top, and it can get out of control. And so at the end of the day, I do believe that there are ups. No piece of technology is inherently good or bad,
Mm-hmm.
and I think we'll be exploring what are the edges of all of this. What's the safe middle, and what's the extreme edge? And everyone's going to go after whatever they want to go after. There
Yeah.
are a bunch of really interesting observability challenges associated with restaking. So, this is what we do: is we focus on helping everybody understand what's really going on inside the machine, so people can assess risks accurately. And we think that restaking is another form of complexity that introduces new observability challenges, which net is an opportunity to provide transparency and to everyone see what's going on. So, it's yet another chapter in this interesting journey, which is the Ethereum ecosystem.
Let's boil everything we talked about too, because we're running out of time here. I know you got a lot to do. I know it's a big day for you at Blocknative, but when you boil all this down, right, in terms of today's upgrade significance, and you explain it to people, could you compare it to the Shanghai and former upgrades before it, kind of how important this is relative to other Ethereum upgrades?
Well, it's generally referred to as the biggest and most complex upgrade other than Shanghai. So it's a pretty significant technological change. It does set the stage for Ethereum to be kind of the foundation of the next economy. It's really hard to be the foundation of the next economy with transaction fees that eliminate whole classes of interaction. And so this clears the way for that. And so when the story of Ethereum is written, I think we'll look back on Dencun and 4844 as a major inflection point, both in terms of the capabilities it provides, but also for promise delivered, right? The Ethereum Foundation has said L2s are the center of the scaling strategy. We're going to make improvements to the network to reduce the expense and the reduced fees, and they've delivered on that. And so I think that is yet another feather in their cap of credibility, ability to ship, and also should give everybody confidence that what they say they're going to do next is also likely to happen. So we're already planning for the next upgrade, which is going to be Pectra, and then the next upgrade after that, which I don't know if it has a name yet, but will include Merkle trees. So there's a lot of cool stuff coming. And if you're bored at Ethereum, just wait 5 minutes because something interesting is coming down the pike.
Yeah, constantly in motion. I think that's kind of the one thing that you've flexed over other ecosystems. And, it's weird because everything's kind of circular in the way that L1s and other, Solana and everything else. We talked about that last time you were on the show with kind of cheaper fees. Now what Dencun does to maybe keep Ethereum's pace with other L1s and cheaper fees, like I wonder how important this is to put Ethereum back, kind of, not that it needed to be put back on the map, but what would you say to people who are outside of the ETH ecosystem about how important this is in that race?
I would say come on in. The water is great in Ethereum. It's an incredibly dynamic and welcoming community. It's also a very honest and self-reflecting community. So sure, fees on Ethereum have been high. They're about to get a whole lot lower. Composability has been a real focus. Decentralization has been a big focus. Total economic security has been a big focus. And so I think what's impressive about Ethereum is it's been true to its values of a globally decentralized sort of base financial layer. And while it continues to push the boundaries in terms of what's technologically feasible, I think you'll continue to see see the Ethereum ecosystem look to other ecosystems for interesting ideas that can be incorporated. We're by no means proprietary about any of that, and also strengthen ties between the various ecosystems that are out there. So at the end of the day, It's all about who's got users, who's got liquidity, who's got applications being built. There's a lot of really interesting stuff being built and that will be built on Ethereum. There's also interesting stuff being built elsewhere, and that's great. I think having a plurality of opportunities out there and having more ideas being explored is great. But Ethereum is very much looking ahead. It's not looking over its shoulder, and it's trying to provide the best experience possible for as many people as possible with as limited sort of censorship or sort of Big Brother stepping into the middle of it all. There's many questions that still need to be answered, but the path is pretty clear, and I think the track record speaks for itself. And we're just super excited to be a part of this ecosystem and super excited to be a part of the next phase of its evolution.
Yeah, I think it's been pretty fun as again, a community-owned show built on Ethereum. Our membership passes that let anyone co-own coinage. It's all built on Ethereum, and now seeing kind of transaction fees on layer 2s coming to the mix. It's been interesting. We have a free trial pass built on Base as this is all kind of played out. So the super chain alive and well when it comes to what we're building, and just looking at the head site or the website right now too on our side. But Matt, always love having you on the show, man. You explain everything so simply. It's good to chat again. You got to come back on soon, and congrats again, I guess, to you and every other builder who's in Ethereum right now for the big Dencun day.
You bet. My pleasure. And thanks so much for having me. And congrats to everyone who is a part of this. And here's to the next chapter. Okay.
Yeah, man, for sure. We got to keep building out there. It's fun to see it. The excitement's back, baby. We're back. Matt Cutler there, the co-founder at Blocknative, as well as the CEO running the show. That's going to do it for our chat. As always, you can catch all the headlines on coinage.media and co-own our project with the co-founder of Netflix and other big-name Ethereum builders. For everybody here at Coinage, I'm Zach Guzman for Matt Cutler. We'll see you again soon. Adios.